Okay, welcome to Principles of Finance. My name is Julio Rivas Aguilar. I'm a professor of finance here at Lipscomb University, of finance or finance, um, and I will be your guide through this course. Um, this is our first video from our first chapter, so we're going to discuss a little bit of theory. First of all, what is finance? Well, finance is basically the fact that we are allocating value. There are different ways in which we can put value to everything we own or the service we use or the decisions we make, right? If we buy a chair, for example, well, a chair is going to have some specific value, right? Now, if that chair was used by the Queen of England, it might be more valuable for other people, right? So people might be willing to spend more money on a chair in spite of the fact that it's only a chair, right? Services, well, we live in economic times in which services are widely used. So every time we pay for a service, we're making a financial decision. Also, the decisions that we make. I mean, the fact that you are taking this class is a financial decision. So it has some value for you, right? I mean, hopefully by the end of once you finish all your coursework, well, that's going to be beneficial for you as well, right? So that's basically in a nutshell what finance is. So financial management is the main topic of this class. It's how a business or how an organization decides to allocate value to everything they or all of the decisions they make. So basically this table right here shows four different participants in the market, right? People with no money and no ideas are type 1, I mean, people that, well, they are not in a business and they don't have anything additional. Type 4 are people with both money and ideas, right? Warren Buffett, for example, is one of these people. He probably started with not a lot of money, but nowadays he has a lot of money and a lot of ideas, right? Probably the Google guys, Steve Jobs when he was alive, they're also part of the Type 4 people. Now, the two that we're going to be focusing on is type 2, which is people with money but no ideas. These are called investors, right? So there's some people that have money, additional resources, but they don't really have business ideas. In a way, a lot of us, or most of us, are investors, right? You have a retirement account, for instance, you're investing your money um, into someone that has ideas, which is type 3, right? Now, if you have retirement but you also have your own business, well, you're both, right? So that's the thing, right? We're trying to match people with money and no ideas with people with no money and ideas, and that's what's gonna create income, right? Um, Now, the money, obviously, when you are investing in a corporation, well, a corporation is going to invest in different projects, right? And those projects are going to become profitable, hopefully profitable, and then you're going to be receiving more money, right? So that's the whole thing. You give your money away so that you can get more money in the future, right? You're giving up your consumption, you're forfeiting your consumption today so that you can have more in the future. In the meantime, you're giving it that money to someone that's investing, and that person's job is to make more money, right? To invest in a project that is going to be profitable enough so that you get more money and so that they get money, right? Um, Now, you don't get all of your money back. There's something called retained earnings, which are the savings of the corporation. So corporations need to have savings, and that's what retained earnings is all about. Taxes, well, we all know taxes, and we all need to pay taxes, right? Now, there are different areas, sub areas of financing. One of them is investments. Pretty much decide where you're going to put your money, right? Individuals deciding where to allocate their money. Financial management, which is the purpose of this class, is how to get cash and how to use cash, right? How are we going to raise capital, right? I mean, are we going to use new stocks, new bonds? Are we going to get loans? Taxes. Taxes are extremely important, right? Large corporations make a lot of decisions based on their taxes. Also, we need to figure out which projects are we going to invest. I mean, some of them are going to be very profitable, some of them might not, but they might not be that risky. So we might want to invest there, right? Um, Now, another sub area is financial institutions and markets, how the framework, how everything works and everything is linked together. International, obviously, when we go abroad, we run into different hurdles. Now, this is not the topic of this class, but it's important for you to know that if you go to another country, there are different laws, there are different risks, there are different currencies. There's a lot of differences, and makes it more complex